Good morning. I am presenting for 10 minutes on a topic that may be interested by people that they want to do investment related to ESG. And this presentation has been actually, I did it like a year before at a company called Credit Suisse, which they have the Swiss investment banker and I from Hong Kong to talk about how environmental investment and green finance are relevant in both Switzerland and Hong Kong. So this is the second round. I improved a little bit, updated some data. And so there are two missions today. The first one here is to discuss a little bit about what is green finance in my mind. And the second thing here is talking about how we can understand changing from SRI to ESG investment. I'll explain this acronym later. Okay, here we begin. Again, everything eventually is down to Mother Earth, the nature. Hopefully that all this investment, all this ESG investment in green bond will lead to a better society. And if we have time, 10 minutes pass fast, then we talk about research a little bit about some preliminary results I found by using company brand, brand of company and how that will lead to green bond issues. If we have time, we showed you a little bit about my results. All right, first, let's define what is green finance. So according to the IDFC, which is developed jointly by IFC and the World Bank, which define green finance as the investment flowing into projects, and the projects that actually eventually lead to more sustainable economy. That's a very general definition. But the punchline here is sustainability. What does it mean? Well, it means that from my personal view, we have two dimensions. On the left-hand side, the physical environment, which is infrastructure. That's why a lot of investment banks, when they do green bond issues, is under the infrastructure department, because it's basically a lot of these capital projects are building roads and highway and factory buildings and all this infrastructure. So green building, green plant equipment, green product production process, all this lead to better outcome. The outcome will be cleaner air, cleaner energy, cleaner food. For whom? Of course, for us, for human beings. So it's for better health, for better lifestyle, and reduced poverty. All this from the left-hand side, for a sustainable environment, will lead to a happier and greener society, and eventually benefit Mother Earth. So the Earth can be sustainable for the long term. So in a nutshell, what is green finance? Green finance is the beginning of all the steps lead to sustainable society, because everything we do in Hong Kong, in the world, we need money. So therefore, it begins with what we call green money. Now, there are some statistics that you can download anywhere, so it doesn't really matter. At this point, I will show you here globally, we have about $500-something billion last year issued green bond, which is compared to the investment market is nothing. So this is a tiny market. It's the beginning of a trend. Definitely, we're not there yet. We're getting there. But one slide I will show you here is China. You look at China, it's a second bar. That means the second largest green bond issuer in the world. But it's interesting, the two colors for the bar for China is orange and blue. What does it mean? It means that a significant percentage of the China green bond, they do not follow international standards. They have their own standard called green. It's really green? We don't know. So there's still a long way to go, but certainly we are there in terms of quantity. But quality of green bond still have to improve. Growing, Chinese bond growing, that's fine. It just still continue to grow. Up at Hong Kong, we are here in Hong Kong as the financial center, and our chief executive had mentioned about 6 months ago to 9 months ago that we will issue as a Hong Kong government up to 100 billion Hong Kong dollars of green bond to support infrastructure projects, including everything we build from now on. We call it green bond supported. So there are a few green bond issues in Hong Kong, but again, the market for green bond in Hong Kong is tiny. So whatever we do in green bond, green finance, we focus on the Chinese market. Hong Kong is the platform, but not the user of the money. I'm going to spend the next 5 minutes on these next 2 slides. I think this is important. What is SRI? What is ESG? SRI stands for Socially Responsible Investment. And it has been around for 90 years, according to a book that my friends wrote in the US. But actually, the term ESG, which stands for Environmental, Social, and Governance. ESG factors have been around for only not too long, since 2006, from the UNPRI. And it was a UN project, and then PRI spin off, and it set up its own NGO in London. It's called the Principle of Responsible Investments. Most of the money managers, asset managers in the world, they will pledge to PRI principles. So this is the dominating body that will certify or approve what you do call responsible investment. And so now I'm going to spend 3 minutes to talk to you the difference between SRI and ESG. I think this is important. First, if you look at SRI investment, social responsible, which is around for 90 years, they focus on principle. What does it mean? Like religion's principle, ethical principle. So let's say I have an SRI investment fund. What does it mean? It means that maybe I'm a Buddhism. I have all my stock that will not violate my Buddhism principle. That's my SRI investment fund. That's it. I don't care about criminal. I don't care about other things. I don't care about other cultural things. I don't care about environment. I just care about my religious belief. That could be SRI. But on the other hand, for ESG, it's more return focused. What does it mean? It means that no matter what we buy in these ESG stocks, we focus on the ability to generate acceptable return for the asset owners. This is very different. Second difference is for SRI, they use negative screens. But for ESG, we use positive screens. What does it mean? It means that if you are the asset owner, you got $10 billion to invest, it's the Li Ka-shing Foundation. And then you said that I don't want any company that produces tobacco or marijuana. You exclude those stocks. That is negative. You delete, you take it away. But for ESG, it's positive screen. What does it mean? I like this stock. This stock do something good for the society. I add a point there. I give a score there. It's a rating, and hence a higher number. In that regard, the ESG for this particular stock will have a high ESG rating. And then at the end, the portfolio I buy will have stock with higher ESG score somehow. That means you pick the stock with high ESG tilt or preference. That is called the positive screen. Or a different approach. The last one is different criteria, as I mentioned. For SRI, it's very diversified. There's no a single theme. It could be religious, could be cultural, could be organizational specific. Those could be theme for SRI. But for ESG, it must be E, S, and G. Maybe you can concentrate on E and less than S and G, but still you have to be within the same boundary. So that in that regard, it's more well-defined. Now, after that, I want to tell you what I think. I think in the future, for the next 10, 20 years in the investment arena, the ESG as an asset class, a portfolio focus, should be the path, but it's difficult. Why it's difficult? You look at academic research, look at industry research, it's basically not substantial enough evidence or research to calculate the risk of ESG investments. What is the risk positioning of ESG investment? How can you combine social returns with financial return to quantify the benchmark for ESG as an asset class? Important, we are not there yet. But ESG as a screen, of course, everybody claims they do it. I'm an investment committee member for a large pension fund in Hong Kong, which we oversee about $9 billion US. And we constantly ask our asset managers, what is your ESG preference? How do you screen your ESG stocks? So this has been done. Most asset managers will say they do some ESG, but how? It's very loose, okay? So the conclusion I have here is the benchmarking of ESG for the next 10 years in the world, especially in Hong Kong, where we issue so many green bonds. This is what we want to do. At this point, it's a two-dimensional graph. This is financial return. This is social return. Social return means that do good to the society. Better environment, better air, better food, okay, whatever you think as the owner prefer. And the point here I want to make here is how do we define a higher social and financial return? The highest financial and social return means that we need to have a matrix to combine this, to quantify social return by using utility function to understand how the asset owner choose social return and combine it with financial return to have one single indicator to evaluate the success of ESG investment. This is where we should heading. And eventually, I'm going to skip over all my research. I have 1 minute, and I'm going to show you my final punchline here for the results. What we have done here is we have some company globally issue green bond, and we look at also this company, they receive some branding award like Coca-Cola, the best brand in whatever. And then we correlate the brand company with the company that issue green bond. What we found here is when a company that actually have a good brand, and they also have a high ESG score using the Bloomberg index, the Bloomberg ESG score. And the probability of a company that issue green bond is higher. So we try to prove to the audience that and the research people that actually a company issue green bond is not like I wake up one day, I issue green bond. There's a path from survival, financial strength, getting brand, eventually getting green. Once again, is James Bond or green bond? Well, it's a true hero if you use the green bond properly. Thank you.